In today's video, we are breaking down a powerful interview featuring 𝗗𝗓, the head of research at Fundstrat and the chief investment officer of Fundstrat Capital, joined CNBC's Squawk Box, where he lays out why he believes stocks are setting up for a big year and why crypto could be next in line. 𝗗𝗓 also discussed Bitmain's $200 million investment in Beast Industries, how that partnership came together, and what it signals about the future of markets, technology, and digital finance. I'm going to play the clip of 𝗗𝗓 from the CNBC interview so you can hear his perspective directly. Right after that, I will walk you through my own reaction and breakdown of what he said, including what I agree with, what I think the market may be underestimating, and how this all fits into the bigger picture for both stocks and crypto. Then, I'll give you a deep dive into what I believe is one of the best fintech disruptor stocks to buy right now, and how it connects to the themes 𝗗𝗓 is talking about in this interview. Before we get started, make sure you hit the like button and leave your thoughts in the comments below. Subscribe to the channel so you do not miss the next important investing update. Now let's hear what 𝗗𝗓 has to say.
Ethereum treasury company Bitmain is partnering with a YouTube powerhouse, making a $200 million investment in Mr. Beast's company, Beast Industries, joining us exclusively ahead of today's Bitmain stockholder meeting. Bitmain chairman 𝗗𝗓. He's also head of research at Fundstrat, chief investment officer of Fundstrat Capital, and a CNBC contributor. You got to explain this to everyone, including me, the rationale here, Tom.
Good morning, Joe. There's a lot of strategic rationale to this move made by Bitmain. As you know, Bitmain is the largest Ethereum treasury company in the world, the largest holder of Ethereum. And it's our view that Ethereum, which is a smart contract platform, is the future of finance, where digitalization of not only dollars, but stocks and equities is going to take place. And over time, that really blurs what is a service versus what's digital money. And that's where a collaboration and investment into Beast Industries makes sense. As you know, Mr. Beast is the #1 content creator in the world. His content is watched more than, for each of his videos, 252 million views a month, which is more than the Super Bowl. And really, he is probably the iconic person for Gen Z, Gen Alpha, and arguably millennials. So he is probably one of the most important creators in the world. Beast Industries, according to Jeff Housenbold, is planning to create a future platform of services, which includes digital items and even financial services. And that's really where a collaboration between Beast Industries and Bitmain will make sense. So I think it's part of this sort of evolution of digital platforms and money, and I think it's really uniting the #1 creator in the world with the biggest Ethereum platform in the world.
Kind of getting it. Is there a reason that you like the Ethereum blockchain more than Solana, or will both exist? Could you have done this with Solana?
I think there is going to be room for multiple blockchains. Ethereum is the largest blockchain in the world. It is almost 70% of all tokenized assets are taking place on Ethereum. And Ethereum is extremely resilient. It's had 100% uptime since inception. The only blockchain smart contract platform to have never gone down.
Right. But I guess there are differences, and each has its, people that think that there are certain features about Solana that are better, people that think that there are certain, and it gets very arcane, and we get down into a rabbit hole. So what would the future look like for the digital tokens that Mr. Beast, that would be traveling across the Ethereum network? What are we talking about? Just describe it and how it would work.
Well, I think it's really going to be up to what Beast Industry unveils. So, I think if I was to imagine things that'll happen, #1, we know that stablecoins have become increasingly mainstream. It is really the breakout product of 2025. And we also know that Wall Street, firms like BlackRock and Robinhood, want to tokenize almost everything from stocks to credit to real estate, and eventually things like intellectual property and even loyalty points. I imagine that those are the kind of products that could be emerging on any future services platform, and that's where it's going to be a natural fit between a company like 𝗣𝗟𝗏 and what Beast Industries does. But from 𝗣𝗟𝗏's perspective, Beast Industries, is a very unique company. I mean, for us, I think as just an investment and being part of the cap table where there are some really high-quality venture capitalists and other investors represents a good investment opportunity for us, or what we call a moonshot.
Can we just get your viewpoint on the January stock market action in the S&P and in crypto? And is it? I think right now it's kind of going along in the way that you told us it would at the end of last year. At least I think we were down around 80,000 on Bitcoin. That's recovered. The stock market started out pretty strong. It's had a couple of rough sessions, but you expect pretty good gains this year after a mid-year slump.
I do. On markets broadly, I think it was good news that the first 5 days of January was positive. It's a really good omen for the rest of the year, and I think it puts upside to our 7,700 for the S&P 500. I think some of the turmoil in the past couple of days in financials and the broad market, along with crypto, do reflect how policy, especially Washington, picks winners and losers. As you know, Washington is trying to cap credit card rates. I think that that's going to hurt financials if this is implemented, because it's going to reduce their ability to offer credit to many types of consumers. But at the same time, the fact that the Clarity Act is moving forward is really good for crypto. Crypto really got hurt October last year, so it is our view that we're going to have a pretty big recovery as we put more time between that moment. And so we like Bitcoin. We do think it's going to make a new all-time high this year, and we're probably more favorable towards Ethereum, and we expect the Ethereum to outperform Bitcoin.
What immediately stands out is the announcement that Bitmain, which Tom Lee describes as the largest Ethereum treasury company in the world, is making a $200 million investment into Mr. Beast's company, Beast Industries. At first glance, that sounds almost absurd. You hear crypto infrastructure and YouTube creator in the same sentence, and it feels like a marketing stunt. But as Tom Lee explains it, this is not about hype. It is about positioning for what he believes is the next phase of finance. Tom Lee's core argument is that Ethereum is not just a cryptocurrency. In his view, Ethereum is the foundation for the future of finance because it enables smart contracts and tokenization. That means not just digitizing dollars, but digitizing stocks, equities, real estate, intellectual property, and even loyalty points. When he says the line between a service and digital money is going to blur, that is an important idea. He is suggesting that platforms people already use for entertainment and commerce could quietly become financial ecosystems without users even realizing it. This is where Mr. Beast comes in. Tom Lee makes it very clear that Mr. Beast is not just a popular YouTuber. He frames him as the most influential creator in the world, especially for Gen Z and Gen Alpha, and arguably millennials as well. The fact that each Mr. Beast video averages over 250 million views per month, more than the Super Bowl, is not just trivia. It is meant to highlight distribution power. In my opinion, that is the real asset here. Attention is the currency, and Mr. Beast controls an enormous amount of it. Tom Lee hints that Beast Industries is planning a future services platform that could include digital items and financial services. He does not spell out exactly what those products will be, but he does not need to. The implication is clear. If you already have hundreds of millions of highly engaged users, layering in digital ownership, tokenized rewards, or even payments becomes much easier than trying to onboard people from scratch. Personally, I think this is one of the most underrated points in the entire interview. Crypto has struggled not because the tech is bad, but because distribution and user experience have been terrible. Mr. Beast solves the distribution problem instantly. When asked why Ethereum instead of Solana, Tom Lee takes a pragmatic stance. He says there is room for multiple blockchains, but he emphasizes Ethereum's dominance. Nearly 70% of tokenized assets live on Ethereum, and it has had 100% uptime since inception. That reliability matters a lot if you are talking about financial infrastructure. While Solana has speed advantages and a passionate community, Ethereum's resilience and institutional adoption give it a credibility edge. I tend to agree with him here. Speed is great, but reliability and trust matter more when real money and real assets are involved. As the conversation shifts to what these digital tokens could actually look like, Tom Lee brings up stablecoins and tokenization as the breakout trends of 2025. He points out that major Wall Street firms like BlackRock and Robinhood are already moving toward tokenizing everything from stocks to credit and real estate. This is not some distant sci-fi future, it is happening now. In that context, imagining Beast Industries offering tokenized digital items, loyalty points, or even financial products does not sound crazy at all. It sounds inevitable. From Bitmain's perspective, Tom Lee frames the investment as both strategic and opportunistic. He calls it a moonshot, but not in a reckless way. He emphasizes that Beast Industries has high-quality investors and strong fundamentals. This is not a meme investment. It is a calculated bet on where consumer platforms and finance are converging. I appreciate that framing because it acknowledges the risk while still justifying the upside. The interview then moves into broader market commentary, and this is where Tom Lee leans into his reputation as a market strategist. He highlights that the first 5 days of January being positive is historically a good omen for the rest of the year. He reiterates his upside target of 7,700 for the S&P 500, which is an aggressive call. He also explains that recent market turbulence reflects policy uncertainty, especially in Washington. One example he gives is the attempt to cap credit card rates. He argues that while it sounds consumer-friendly, it could actually hurt financial institutions and reduce access to credit for certain consumers. At the same time, he points out that regulatory clarity for crypto, specifically the progress of the Clarity Act, is a major positive. Crypto was hit hard in October of last year, and in his view, as we move further away from that period, a recovery becomes more likely. Tom Lee makes it clear that he remains bullish on Bitcoin and expects it to make a new all-time high this year, but what really caught my attention is his stronger conviction in Ethereum. He explicitly says he expects Ethereum to outperform Bitcoin. That's a bold statement, especially given Bitcoin's brand dominance. Personally, I think this reflects a shift in how investors may start valuing utility and yield over pure store of value narratives. Toward the end, he addresses concerns from investors questioning Bitmain's strategy, particularly around not yet reaching a 5% Ethereum allocation while making unconventional investments like Beast Industries. His response is essentially a promise of a broader, structured plan. He mentions that Bitmain's 2026 strategy will be built around 4 pillars of growth, one of which is reaching that 5% Ethereum allocation and optimizing yield. The takeaway from this interview is not just about a single investment or a single blockchain, it is about the merging of finance, technology, and culture. Tom Lee is arguing that the future winners will be the platforms that combine trust, infrastructure, and massive user bases. Whether this specific partnership delivers on its promise remains to be seen, but the logic behind it is far more coherent than it might appear at first glance. If nothing else, it is a signal that crypto is no longer operating on the fringes. It is moving directly into the mainstream, through channels people already know, trust, and engage with every single day. At the center of this financial revolution is NU Holdings Ltd, ticker symbol NU, a company that has rapidly become a household name across Latin America. NU is Latin America's leading digital banking platform, already impacting tens of millions of people by making banking more accessible, intuitive, and affordable than ever before. Backed by giants like Berkshire Hathaway and visionary investors, NU has transformed from a scrappy startup into a dominant market leader, setting new standards for the industry. It's not just another fintech company, it's redefining what banking means for an entire generation, breaking down barriers that once kept millions excluded from the financial system. NU's mission is clear: to fight complexity and empower people to take control of their financial lives, giving them tools that are simple, transparent, and designed for real needs. In Brazil, Mexico, and Colombia, NU is more than just a bank. It's a symbol of progress, hope, and opportunity for millions who were previously underserved. Its iconic purple card represents a bold break from exploitative legacy banks, offering fairer terms and a fresh approach to personal finance. NU's brand is built on trust, transparency, and exceptional service, creating a level of customer loyalty that's hard for traditional banks to replicate. This loyalty fuels organic growth, as satisfied customers become NU's best marketers, spreading the word to friends and family and driving rapid adoption. NU's scale is immense, with operations spanning major cities and millions of users, but in many ways, it's just getting started on its journey. Every transaction feeds its advanced algorithms, allowing NU to continually refine its products, improve risk assessment, and personalize services for each customer. This creates a powerful flywheel effect. Better products attract more customers, generating more data, which in turn leads to even better products and experiences. NU's leadership team blends cutting-edge tech vision with deep local market knowledge, ensuring their solutions are tailored to the unique needs of Latin America. They're not just copying global models, they're building innovative solutions from the ground up to address Latin America's specific challenges and opportunities. Their disciplined, sustainable approach to growth and profitability sets them apart in the global fintech landscape, making them a model for others to follow. 𝗗𝗑 isn't just growing fast, it's building a resilient business designed to thrive for decades, with a focus on long-term value and positive impact. That's why 𝗗𝗑 Holdings stands out as a top-tier investment opportunity, combining innovation, scale, and purpose in a way few companies can match. 𝗗𝗑's greatest moat isn't just technology, it's being the gateway to finance for millions of people who were previously left out of the system. By opening doors that were long closed, 𝗗𝗑 has become a symbol of hope and progress for entire communities. In Latin America, most people were unbanked or underbanked, ignored by traditional banks that saw them as too risky or unprofitable. For decades, these institutions made banking feel exclusive, with endless paperwork, high fees, and little empathy for everyday needs. 𝗗𝗑 turned this challenge into its greatest strength, using advanced data analytics and a low-cost digital infrastructure to reach and serve the underserved. By leveraging technology, 𝗗𝗑 could offer affordable, accessible products, tailored to real people's lives. It created a loyal customer base from the very first financial interaction, making banking feel personal and empowering for the first time. This first-mover advantage in financial inclusion is nearly unassailable. 𝗗𝗑's early entry allowed it to build trust and brand recognition before competitors could react. When someone gets their first account or card from 𝗗𝗑, it becomes their primary financial relationship. For many, it's the first time they feel truly seen and valued by a financial institution. The relationship is sticky. 𝗗𝗑 integrates into every aspect of their financial life, from daily spending to long-term savings, and even family budgeting. Switching costs are high, trust is hard to replicate. Once customers experience 𝗗𝗑's simplicity and transparency, going back to traditional banks feels like a step backward. 𝗗𝗑 isn't just a service provider, it's the foundation of its customers' financial lives, supporting their goals and dreams at every stage. This deep integration gives 𝗗𝗑 unmatched insight into user behavior and creditworthiness, allowing it to anticipate needs and personalize experiences. 𝗗𝗑 can underwrite loans more accurately and offer the right products at the right time, reducing risk while increasing customer satisfaction. Cross-selling drives future revenue and customer value, as users naturally explore more services within the 𝗗𝗑 ecosystem. By bringing millions into the formal economy, 𝗗𝗑 fosters growth and stability, empowering small businesses and families alike to thrive. As customers prosper, they use more 𝗗𝗑 products, strengthening the business and deepening their connection to the brand. 𝗗𝗑's success is tied to its users' prosperity, building trust and brand affinity that lasts for years. Traditional banks can't match this alignment, nor can they easily replicate the emotional connection 𝗗𝗑 has built. 𝗗𝗑 isn't just winning customers, it's creating partners in financial empowerment, transforming lives and communities for the better. 𝗗𝗑's growth engine is a masterclass in efficiency. Most new customers come from word of mouth and organic channels, no billion-dollar marketing budgets needed. This allows 𝗗𝗑 to reinvest in technology and product development. The journey starts with a simple, no-fee account and credit card. Easy to adopt, removing banking friction. Initial revenue is low, but the focus is on building relationships and gathering data. As trust grows, 𝗗𝗑 layers in higher-margin products, loans, investments, insurance, and business services. 𝗗𝗑's data advantage enables personalized, pre-approved offers within the app. The key metric, average revenue per active customer, RPAC. As cross-selling increases, RPAC and margins soar. 𝗗𝗑 is evolving from a digital bank to a full financial ecosystem. The goal, meet every financial need within a single platform, increasing stickiness and lifetime value. 𝗗𝗑's ability to launch and scale new products is proven. For investors, the real value is in deepening relationships with millions of loyal users. Brazil is the heart of 𝗗𝗑's story and the blueprint for its expansion. The Brazilian banking sector was dominated by a few incumbents charging high fees and offering poor service. 𝗗𝗑 disrupted this with a simple, mobile-first approach, transforming banking for millions. In just a few years, 𝗗𝗑 became one of Brazil's largest financial institutions by customer count. Its no-fee credit card and digital account broke down barriers and built a trusted brand. 𝗗𝗑 then expanded into lending, investments, insurance, and business banking. Brazil's profitability proves 𝗗𝗑 can acquire and monetize customers at scale. The lessons from Brazil now guide 𝗗𝗑's international expansion. 𝗗𝗑's playbook for entering new markets is a major competitive advantage. Success in Brazil funds and inspires aggressive growth across Latin America. Brazil isn't just 𝗗𝗑's largest market, it's the engine of innovation and financial strength. This foundation powers NU's continental ambitions. With Brazil established, Mexico and Colombia are NU's next growth engines. Both countries have large, young, digitally savvy populations, and banking sectors ripe for disruption. NU's proven playbook is driving rapid customer acquisition in both markets. In Mexico, banking penetration is even lower than Brazil, making the opportunity immense. Early traction has exceeded expectations, with viral growth taking hold. Colombia's banking system is also ready for change, and NU is meeting overwhelming demand. The focus now: acquire customers and build brand loyalty. Monetization, loans, investments, more products, comes next. These markets offer massive, independent growth vectors beyond Brazil. NU is becoming a true, pan-Latin American financial powerhouse. New Holdings carries a market capitalization of approximately $80.46 billion, reflecting strong investor confidence in its digital banking model across Latin America. NU Holdings is currently trading at a price-to-earnings ratio of about 31.93, with earnings per share coming in at 52 cents. In 2024, the company generated total revenue of roughly $8.26 billion, while delivering net income of approximately $1.97 billion. These numbers highlight a business that is not only growing rapidly, but is also scaling profitably, which is still relatively rare among fintech companies operating in emerging markets. NU's vision isn't just to be a bank, it's to be Latin America's central financial platform. A bank sells products, a platform builds an ecosystem. NU's integrated app lets users save, spend, borrow, invest, and insure, all in one place. The more services a customer uses, the more valuable and sticky the platform becomes. NU's modern cloud-native tech stack enables rapid innovation and low costs. New products launch quickly, responding to customer needs and strengthening the ecosystem. Investments and insurance are natural extensions, deepening relationships and increasing revenue. The goal: capture a larger share of each customer's financial life, all within NU's high-margin platform. NU can expand into adjacent markets, e-commerce, payments, even telecom. The core asset: trust, with tens of millions of users. As long as NU maintains this trust and executes, its compounding potential is enormous. The platform, not any single product, is the key to long-term growth. Analyzing NU Holdings shows the power of deep business moats and long-term growth drivers. It's not just about stock charts, you need to understand the business and its unique advantages. That's the focus of our Value Stocks Investing Master Course. We teach you to find and analyze high-quality compounders like NU. The course covers financial statements, competitive advantages, and intrinsic value. Learn to think like a business owner, not a speculator. Invest in your most important asset, your own knowledge. Investing is better with a community. Join our exclusive Patreon group for deeper research, watch lists, and real-time insights. It's a space for candid discussion and collaborative learning, away from social media noise. Get direct access to me and like-minded investors, plus exclusive Q&As. Your support funds our independent research and analysis. Discussing companies like NU with others reveals new perspectives and risks. Sharpen your thinking by stress-testing ideas in a supportive network. This collaborative process is what separates successful investors from the crowd. We look forward to welcoming you and helping you navigate the markets with confidence. NU Holdings is a dominant, scalable platform solving a fundamental need for millions. With a proven model, beloved brand, and multiple growth levers, NU is a compounding machine. You're investing in a leading financial platform with its biggest growth still ahead. Brazil's success funds expansion, while NU's tech edge keeps it ahead of competitors. Risks exist, but NU's market position and execution provide a margin of safety. This is a rare chance to invest in a category-defining company early in its global story. The best investments align profit with positive social change, and NU does both. The revolution in Latin American finance is happening now, led by NU. What's NU's most durable advantage? Tech, brand, or first-mover status? Share your thoughts below. Subscribe for more deep dives into the world's most important companies.